The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I am the host of the show, but I'm also the author of the opening call. That's my daily newsletter, and I mean daily newsletter because it goes out pretty much every day. And over the weekend, I was sending out charts, and one of the things I was discussing is that over a week ago, I discussed a chart pattern on a particular stock called Viva Systems. VEEV is the symbol. And I drawn a pattern that I said I thought was quite likely, that there would be a pullback, and then there'd be a rally. There was also earnings last week, and then there'd be another pullback, a bounce, and then a deeper pullback. And because of that, I said, all the charts, I think I'll have a chance. I hope I have a chance. I'll try to go through some in a few minutes. Let me just see here. Go different computer, different mouse. Yeah, okay. Wait a minute, is that right? Yes, good. I said because of that pattern, and because of a pattern that I've discussed that rarely occurs, it happens often enough over a 10-year period, but it doesn't happen very often in parallel movements with many charts. And what is it? It is this particular up channel. You see this narrow band? Look. Big takeoff from the 21,712 low of the 26th of December. Bounces up and then doesn't make a full arch formation. It just makes a tiny little rollover into that low of the 3rd of January. And then it spirals up. And you can see from this spiral, all the moving averages, the price went above the moving averages, but it also started an incredibly narrow up channel, and that up channel stayed in force all the way through until about a week ago, when right here, when on the 25th, the Dow went to 26,241. Doji candle followed by a second doji candle, tiny little plus sign, another little plus sign, and I said, this seems to me that the pattern that we were looking at VEEV, and I drew it in right here. I discussed it all of last week. I said there's a chance that we could pull back, have a rally towards, up against, or just over the most recent recovery high. That was the high of 26,241 on the 25th. But then we should pull back and go to a lower low to start leg B, probably down. And then we might even find some kind of a base, because one of the aspects of this particular up channel, this narrow little up channel, when it goes to a certain point and then goes sideways for a little bit and then holds the base of the up channel support level and then pushes back towards that top part, when it finally breaks, in this case, that pink trend line you can see there, when it breaks that, it does it quite quickly, quite forcefully. But what you've done now is you've broken this systematic by the dips, higher highs, slightly higher lows, higher highs, slightly lower, higher lows. You've broken that format. The template or the schematic has changed. And you start to get a very wild pattern. Most of the time, I don't recall, unless it's just a huge inverted V-shaped pattern where you get the uppercase A, Eiffel Tower, I call it, and you come straight down. Most of the time when you've exceeded a certain level, there are tremendous supports on the way down, because everyone says, oh, I missed it, I'm going to buy it, I'm going to buy it. So they keep buying, but it keeps going lower. So all I can say right now is my target has been the 14-period exponential moving average for the subscribers we are short, at 25,771. Today, so far, the low is 25,695. bounced a little bit now. It's at 25,747. Maybe the worst is over for the day, or there's another bout to come today or tomorrow. Either way, it seems to me it's going to get harder and harder for these little doji indecisive candles, which have become reversal candles. Not the point. The point is I waited and I waited for this MACD to cross negative. And I said until the MACD expands, and I keep meaning to find out what it's called. I think it's the theta, because it is a distance between the 9-period differential, the green line, and the red line is expanding. That means the amplitude is increasing. I think it's theta. I'm not sure. I'll have to ask one of our knowledgeable TFNN hosts. But in the meantime, that's kind of what I call it. I think it's beta. I think it's theta. So MACD is pulling back sharply now, decisively, minus 38. This is the first time we were plus from January the 3rd. And now what we're looking at is the stochastic. Yep, it's the histogram, Peter, you're correct. But I'm talking about not the result, not the vertical lines. I'm talking about what would you call the acceleration of that distance? In other words, I'm talking about the characteristic, not the pattern. So this is looking forward. This is a foretelling of something, saying that the distance is expanding. So hope that's clear. Finally, the stochastic's under 80%. Now, let me just quickly do this. The S&P, same thing. S&P, MACD crossed negative, stochastics at 81%. It has been pulling back, but it hasn't crossed to under 80%, and it hasn't crossed under the 14-period moving average of 2772. The QQQ was even stronger. Its MACD is negative, and its stochastic is still at 84%. Under 80% is what I like to look at. Then I can put down arrows and all sorts of things like this. So the high today in the QQQ, the NDX Invesco QQQ Trust Series, at trading at 173.15. Look at that big red candle, but it's only touched, it hasn't even broken on a closing basis the 9-period exponential moving average. It's incredible strength. So I'm saying this is a process. IWM, this is a little different because the MACD has already been turning down for a little while, and the stochastic's down to 77%, same as the Dow. So this to me is really important information. Now, I want you to show you a couple of things. This is the Investors Business Daily, and it is the top 50. So here's KL, which is Kirkland Lake Gold. It hit 36.74 on the 28th. It's trading now. It had a low today of 32.25. Made a peak F top. But the MACD is really negative, and the stochastic still pretty good at 82%. That's telling you either we're going to find support very soon, or there's a long way to go before the stochastic goes down to the teens or the single digits. Not sure this is the move that'll do it. We'll see. One step at a time. Next thing is TEAM, TEAM. It's number 2. TEAM is Atlassian Cap Corporation PLC. Big peak E, whopping pullback today, goes from the 100, almost 112 to today's low. In one day, it goes to 99.77. Ooh, that's big. I'll be back in a moment. Basil Chapman, Tiger Conditions Hour. Dow's down 314 points.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman is now down 362. S&P's down 31. We haven't seen this in quite a while. All right, we're going to go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you doing?
I'm well, thank you.
Wow, it's red, isn't it?
You know, it's actually it's white outside because we had this huge snowstorm, but now the sun's shining, and for us the sun's shining because we are seeing red. Yes. So what was your plan and what did you do?
Conversation we had a couple weeks ago, but I went ahead and put an option on the SMH with a March 15th put at 99 strike price.
Oh, very
and
good.
Of course, it's been a little bit of a nerve-wracking couple weeks. Maybe it's just because we couldn't get this market down. My nerves are starting to kick in here. Do you think I should take half off now and let the rest run, or any particular thoughts on that?
Okay, so we are looking at the SMHs, that's the Semiconductor Market Vectors ETF. It's trading at 103.12. So it refused earlier on to try to budge. It was up in the 105.30 area. Slowly it went to 104.90. Just didn't want to. Oh, now it's at 103.13. It's got the message. It just takes a little time. Now, this is going to be very interesting for me. Over the years, I have a good friend who had a semiconductor business. It was bought out, and he's still involved in the whole thing. And I always have said, I listen to him on one hand, on the fundamental side, and very often there's no correlation to the actual price of the semiconductors. And I'm talking about over years and years. And then going into December, he said to me, things just don't look good at all, and the order books are really, this is public knowledge. There's nothing here that was inside information. Orders are down and all that. So I happened to speak to him over the weekend, and he said, once again, public knowledge. I'm not going to tell you anything that you don't know already, but they have announced. Applied Materials and the others have announced that they're only expecting the first 2 quarters to be continue to be soft, very soft, And it's only the third and fourth quarters that they're expecting a big pickup. And these are the people that this time last year were talking about, the graph to them were like economists. They were pointing, trajectory was way up, pointing up into the sky because they thought that would continue the incredible year and a half, 2 years that they'd had. So as far as I can see, the SMHs have been bought for other reasons because they were value. I don't know what the reasons are, but it seems to me from what I'm hearing that I have to separate the price performance. And believe me, I did not expect a 27% increase from the December low to now, based on what I thought was, if I mixed in the fundamentals, even with the technicals, to get a V-shaped recovery like that, it's just so unusual. So this is what I'm going to say to you. If you have enough, because of the speed and because of what's happened so many times, I would definitely just take a little bit off, but I would try to keep this core position for at least one more day. And this is the reasoning. I have the chart formation that I've shown right here. I put it in, I typed in, I showed subscribers over the weekend what we're looking at because we are short the SMHs. I said there could be this V-shaped pattern that rallies and it maybe gets close to, I'm not sure it can go to a new high, but maybe it could. But then there should be a sharp sell-off, and that sharp sell-off should take you underneath trough A, which is at 102.22. I don't see any reason why I should change that. It might, you're in March, so you've got a couple of days here. You know that you're going to lose premium because you're so close with, what is today? So it's one, you've got 2 Fridays, 2 full weeks to go, right?
Two full weeks, right?
2 full weeks, because it's very unusual to have options Friday on the third Friday, but you're only 2 weeks. That happens when the first is a Friday, and that's exactly what's happened here. So this is what I'm going to say. I think because of the speed and because we've been here before and anything can happen, just take something off. You're seeing a real nice profit at this particular point. Take something off, but try to keep at least 2/3 of the position. One part of that, if you see the SMHs go underneath 102.22, the low of the 27th, if you're able to watch, I don't think you're able to watch all day, but if you're able to watch it, the moment it goes underneath, tighten up the stop on a part of your position. That's the position that might get taken out. But my thinking here is that you've got all the way until the end of March. I think the SMHs are going to go to the 100 to 99 area. That's been my target for a while. I haven't changed that. I don't see any reason to change it. Markets can do strange things.
And I apologize. Another option, literally no pun intended here, is
good one.
Is to maybe take a further expiration date at the same strike price.
Yes. Okay. So then you know what you might even want to do, because we are now looking at this, and if I'm correct, and this V-shaped pattern in the weekly chart has at least the 99s as a target on the SMHs, but if it takes out 99 support, I think it could be a quick trip down to the 97s or even the 95s, 96s, and then I think I want to be looking to switch maybe to the long side. So I'm going to say to you, if you're able to take profits, and with the profits you could buy April, maybe that's another way to do that. But the configuration of how you do it really implies, I think this is the week that from my perspective, I want to see the acceleration down now. I do not want to see another bounce, because then you're using time and not price. I want to see price more than time.
Okay.
So
got it.
So what
I'll do then is I'll put a tight stop on 1/3 for today. I'll let the 2/3 ride and see what happens tomorrow.
That's the other way. And the other thing is, because we're looking at rolling into April, I don't think right now you need to make it. You need to rush into that. I think there will be a bounce where you'll get a pretty decent price, but this is the way I would do it. Speed is, something's going on. I don't know what it is for the market to drop almost 400 points when we've had buying on every single 100 and 150 point dip. So something's a little different. I hope it's the scenario that we're looking at. So hey, congratulations on doing the trade.
Yeah, well, I appreciate it. And unfortunately, I didn't buy it at like a 105 price point either. So I'm not really making a lot of money.
Oh, okay. All right. So
it's a little bit of recovery, to be honest with you. But if it actually goes down to 99 in the next few days, I think I absolutely will make a nice profit for sure.
That's good. But all right, if you are just making a little bit right now, with the speed that you've got, I agree with you exactly. Lower the stop on some part of that position because, as I said, bounces happen real quickly. Hey, nice move and good luck. Let me know.
Thank you very much. Sounds good.
Thank you very much for calling. I appreciate that. Ben in Tallahassee. Folks, we'll be right back. Dow's trying to form some kind of a base here just for a little bit of a balance. We'll talk about other things as soon as we get back, and I've got NTAP that we'll do as a little bit of a study. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. I was just trying to get that Boeing. Remember that option that I said, the put option, which I wanted to have for subscribers at 5, but I just wasn't set up for it. I didn't take that. Boeing is down 11 at 428. It had a high on Friday. I was discussing this, and I said, right here is exactly what we were looking at. I was looking at the 445, but I thought maybe the 440, and I had it already. Now I actually can't find it, can't print it because I went and messed up the sequence. But that option would have been around about 5, And I don't know what it would be right now because we're at 429. So that would be really nice. So this is Boeing. And Boeing we've been talking about for a few days. And I said, this is everything I'm looking at here. Even when I went to my automated Chapman wave projections of resistance, I said 440 point, where was it? 440.90 was the only one I've got in the weekly, and the monthly didn't, but I did have 120 that said 446.35, and the high was in fact 446.01. So I didn't do that. We've got other positions, so I can't complain. But the reason why I was thinking of that is because Boeing would have been the tell for me. The semiconductors and Boeing, semiconductors are still not really, it's hardly down 97 cents. That's nothing. So it's going to be, how does the semiconductor sector pull back? Has that been just a major low from the 26th of December? And now we're just going back towards the 99, 96s area. If we actually do go back that far, is it telling us that orders will come in? This is going to be very interesting because you've got China on the one hand, you've got politics. Don't rule out politics. This is going to be, and when I talk about a coded period, I'm about to start this, I don't want to call it the final chapter, but it is this next phase of the coda phase, and it had to have started back in December, way quicker than I thought. I wanted a bounce and then another pullback, and right now in the late March, early September period, pulling back for the kind of the last time before we just accelerate to the upside. We've already begun that. So this is going to take quite a lot of work. Not my thinking on it for myself is clear, but to be able to articulate for other people to understand it, I don't know. I'm going to do my best to try to do that. But this is a very important period for Boeing. Boeing has back orders for, I read something at one point, it was like 15 years of back orders. They even said something like it could be 20 years. I mean, in airline industry, that never works. Somebody starts to say, whoops, we can't do it. Then all of a sudden you get people canceling. We haven't had anything like that for a while. All right. So NTAP was a question I had. NTAP is NetApp. I think it's a hybrid cloud data recovery. I got date, but it should be data recovery. So I looked at this over the weekend, got a mention about it. I think it was Friday, Saturday. So it made a peak E in the Chapman wave at 68.44 on the 13th of February. It pulls back very sharply to the 61 area. 7 points, 11%, 10%. Hey, that's big. Then what does it do? Like most of these things, it just rallies all the way up, day after day. Day up, sharp, day of rest. Day up, sharp, day of rest. It's just amazing. Then it goes to a peak D underneath the previous peak D. And that actually underneath the previous high of peak E. And I don't like to see that. I always want the next buy mode to go above the one on the left. I want to have an alternate count where I'm thinking, is that a previous D or is this now a new A or a B? Nothing like it. It goes to a D. And I said, with the question, I said, no, I think this is, the question was, it is a short. And I said, yes, it is a short. But you just have to wait a little bit to get a sign that it's turned around, which of course intraday it gaps up. It goes to 66.86 underneath the peak D high of 67.02 on the 27th of Feb. Today, it goes open and close are within pennies. Opens at 66.86. The high is 860. Opens at 66.86, and the high is 66.86. Although there was a little tiny wick there. No, that was the high. And it came down. It's at 64.09. It's down 2.15. But on the weekly chart, you have to get momentum to the downside because that momentum, MACD and stochastic, is still good. So on the short side, yes, absolutely. But now, if you have shorted it, you have to put your stop. If your original stop was, say, a point because you didn't want to go much over the previous high, and you certainly don't want to go all the way to 68.44. So now I would put my stop somewhere around 66.10 or maybe even a little bit lower. I wouldn't take a loss on this, because if it's going to gap up and keep, if it turns around, you don't want this. What you want to see is that it tackles very quickly the low of the 19th, 63.26. That, after that little mini peak A right there, that's the level you want it to take out. And then you've got yourself a beautiful pattern that says H pattern in the weekly chart. Now it's going to take a moment to retest the most important low, which is at 61.00, round number low of the 15th, the week of the 15th of February. That's how you go step by step. Was it a perfect one that I would have been wanting to short? Not really, but the question was, is it a short? And the answer was yes. Now you have to handle the trade, because you need both the market and this particular sector. CRM has earnings tonight. This is the monster of monsters, Salesforce.com cloud. I've got this as a peak E, pulling back from the high of Friday of 166.15, just happens to be 166.15. 166.15. Why? What's 181? Why is it 181? Did this get split or something? Oh, it should be 161. Oh, I thought there was a mistake. Yeah, that's 161 was the previous high. I thought, how could it be? It looks like it's higher. Definitely. Yes, 161.19 was the high back in October, plummets down to the 112 area, 113.60 area, pops right back in just 5 months. Boom, four months. It comes soaring back again. And now it's Friday was an all-time high, and now it's at 156. I think this is telling us something. If Salesforce.com tonight has, it doesn't matter what Mark Benioff says, because he's most remarkable. He's the salesman that you should be, unlike Bush, the guy who was at Athena Health here in Watertown, Massachusetts, who used to say the most incredible things, and then you'd have to retract it or something within a day or two. Benioff actually produces the goods, but this time, if there is something out there, and he's going to have to be brutally honest about it, he might just say things are fine, but we could see a little bit of shakiness or something. But he's always talked the stock up, and he has produced it. They are the leaders in the field, cloud computing, from what I understand. This is going to be very important. So if there's any negativity in cloud, the whole cloud area, and Salesforce is the one that talks about it, we might see a much quicker drop tomorrow if that's the case. So this is going to be very important. Salesforce.com after the bell today. Dow's down 300 and something, 357. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his gold report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So over the weekend, what I sent to my subscribers in my opening call, I sent them a chart of the VIX. And here you can see the 3 time frames there, the big one, daily, weekly, monthly, and right here in the bottom, I have the leg D to the downside in the 120-minute chart. And what I've drawn is a little kind of a cup formation and the little arch. And that's where the lowercase h can reverse back to a positive bias. And that's the potential I saw. I had no clue that there'd be a big move like this in to the green in the VIX index. But I did say that this double bottom with a slightly lower low, in this particular case, we made a low today of 13.38, just fractionally lower than Friday's low. That Friday was just fractionally lower than the H, the left side low of the 25th of February at 13.44. So this is a start. If you're a bear, even a short-term bear, this is just a start. The day's young. We've seen how many times suddenly buying comes in. My eye says that the way that the technicals were improving, and that's kind of what I said, that the MACD and stochastic are starting to improve, there was a chance that you had formed a divergence, a positive divergence, the divergence between the price going to a lower low, fortunately just a small fractional lower low, but the very strong positive in the technicals, and with the weekly chart MACD at 2%. I mean, it was actually less than 2%. What was it? I don't think you'd see this very often. You know how I always talk about when the stochastic is up and flat in the 97% area, how fantastically positive this is? Well, in this particular instance, 1.08. No, come on, surely not. Yeah, 1.08. I don't think 1.08. Have I ever seen that before? I don't think I've seen a 1.08 in the VIX index. No, I don't think so. Oh, maybe there. Whatever date that was. That is going 3.66. No, I don't remember seeing this low. I'm sure it's there. I don't remember it. And it says to me that you've got to be really careful here. This market has priced in everything going perfectly. And I think we've got a hiatus coming here where there's a lot of conflagration between different forces. It doesn't matter whether it's China, it doesn't matter whether it's Republicans and Democrats, it doesn't matter whether it's tweeting. It doesn't matter whether it's the Tesla man also tweeting dumb things all the time. Tesla down 9 at 285, on its way to the 273, 200 period exponential moving average in the weekly chart. It doesn't matter. What does matter is price movement. And for me, price movement says if I'm seeing something on the way down, I want the former leaders, especially of this move, which certainly turned out to be the SMHs, I want to see them break key support levels. I'm not interested in words. I want to see deeds. And the deed says SMHs need to come down more. They need to break their 102.22 key support. The VIX index, it's all very well having a little bounce here. I need to see some follow through. I need to see for once some follow through to the upside where you don't get one green candle and then all of a sudden they start to fizzle out and you make a lower low. I want to see the 17.30 area of the 200 period exponential moving average volatility index daily chart hit. I want to see a close above it. I want to see a weekly close, a week. This is the first day of the week, the first 3 hours. This is nothing. I want to see by Friday that the VIX index has a concerted move into the high teens and is holding there. Otherwise, this is just going to be another one of those, do it in one day, and then we go back to trying to rally. I need to see some follow through, and we'll see how that turns out. Now, what I was looking at earlier on, a couple of questions. So did that. Yes. So NTAP, yes, I gave you the parameters for that. What I also want you to do is to go back, if I can find it. I don't want to mess up all my charts, and I don't want to overlook my my engineer telling me that I've got to look at the, okay, PANW. This is number 4 on the list. 1, 2, 3, 4. Number 4 on the list. This is Palo Alto Networks. Makes a leg D in the monthly chart. This is only a leg C in the weekly chart, brand new. And then it makes a G with a kind of a doji candle. And then the third day is a doji, and now it's underneath it. And that says it's trying to fill the gap at 240. Makes an all-time high of 260.63. It's down at 239, I'd say 20-something points is a big move. But until something like this starts to trade under 230, I have to just treat this as, okay, let's see what you've got for us. So within the context of what we're looking at here, you can very quickly get oversold if the bias is still bullish. My gut feeling says we're in the process of making a multi-week consolidation before another big move to the upside. Had a peak F in FTNT, Fortinet Inc., data security products. Ooh, a lot of these data things, all right? Either the cloud or data. And right there at 88.60 on the 25th of February, peak F in the Chapman wave, plummets is now down at 82.89, and that's a 6-point move in just a week. That's a big move, although it had a big move to the upside in even shorter time. So I'm watching these. I don't want to go through them all, other than to say, if you are bearish, you can take some comfort in the fact that we've just had like a 2-day move to the downside, all in 2 hours, 3 hours. Not good enough for me. I need to see the volatility holding up there. I want to see TLT. That's what I said I'd get to. Now look at this. The TLT is bouncing today. It's up 95 cents at 119.61. But have a look at the TNX. TNX.X. This is the 10-year. Look at that nice move that it did right here, breaking out. Let me go to the daily chart, squeeze this a little bit so you can see it better. See all these arches, and now we've broken decisively under the 4th of February high of 27.34, 2.734%. And now we're down below, we're at 2.724, but we went higher. We went to 2.759 on Friday. So this to me is going to be very important. The TBT, same thing, same pattern, except it made. I did this over the weekend, but I didn't show to subscribers because it's a work in progress. The low that was made in the inverse TLT product. This is the ultra short Lehman 20-year T-bond fund. 33.76 was the low on the 3rd of January. It rallies very sharply in short succession to 35.95 on the 18th of January. Then it makes a big cup formation. I thought we were going to have a Chapman wave inside buy mode. We didn't. We got a gray A, a gray B, but then out of the blue, it spiraled over that high that was made at 36.41 on the 18th. So I have to pick up that old C, and this becomes a D. And you can't go A, B, C, D without continuing the previous notation. So this is D. I'll talk about it when we get back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back. So just a quick question. Yeah, it was a peak F in the 10-minute E-mini chart right there just before 10 o'clock, up in the 28, I think it was the 16s area. Yep, it was 16, I remember well. And plummets down to a trough E. If there isn't a rally by I'd say 3 o'clock's getting too late already. But if there isn't a rally by between 10 minutes to 3 to 10 past 3 above the 27.85 level, we're at 27.73 in the E-mini, the March E-mini, that's going to be a problem for tomorrow. So I don't know what the news is, but whatever the news is, it wasn't very good. And CRM, we're watching that this afternoon, Salesforce.com. That could be a leader for tomorrow's action. So a couple of quick questions I had. Yes. Here we go. This is just your first Big day down. We've seen that in the market. The TBT is what we're going to be watching. TBT at 36.12. If it closes above 37 any day this week, that is a close, any day this week, I'm be watching to see if money is coming out of the stock market and going into the so-called safety of bonds, or if it's the other way around. This is also a period where I said there's something different here. This is one of the first times that I've noticed that yields are going up. Money is not going into bonds. It's the other way around. That's why, I'm sorry, the TBT, if it's going up, it means that money is coming out of bonds, because the TBT is the inverse. This is the first time, and this could be saying that this interest rate fear is becoming a factor. If you get the interest rate fear and a kind of a sell on the Chinese news because we went up in the expectation, that starts to make you vulnerable. So this is the scenario. Just make it real easy, because we're about to wrap up. You're going to go to Steve Rose, you're going to go to Dave White, and then Tom O'Brien again. Tom O'Brien this afternoon, 3 o'clock. So let me just do this. If at any point today there's a really big bounce from the 25,644 level we're at right now, minus 381, and all of a sudden you're looking at 25,820, I say, you know what? We could use time more than price. If we stay near the lows and tomorrow's not a good day, this could be a real quick trip downtown. That's kind of what I'm thinking we're going to get because of today's action, but let's go one step at a time. Have a wonderful day. Check out my opening call, my daily newsletter, and good luck trading. Stay tuned for Steve, Dave, and Tom. I'll be back tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.